What's going on, guys? I'll be breaking down the short setup that I took and how I was able to catch the high of the 930 manipulation this morning. First, we're looking at the NASDAQ. This is the weekly chart, and going into the week, we know that we have NFP, and so NFP normally sets the high or low for the month, and we have SMT at the highs. We're also sitting inside of this weekly gap. Let me go ahead and hide all these drawings again. We're inside of this weekly gap. We have SMT with ES. You can see ES is making all-time highs, while NQ is still stuck in this weekly gap. And we now have this bullish weekly fair value gap lower, and as well as this order block. So, for me, going into the week, the low or the high of this bullish, the low of this weekly candle and the high of this weekly fair value gap is going to be my draw on liquidity. Now, if we go into the daily chart, you can see that we kind of have all of these stacked relative equal lows inside of here. And you can see if we go back to the weekly, that area is inside of here. Let's go back to the daily. You can see relative equal lows resting right above that weekly FVG. So, going further down into the lower time frames, this is what need to play price to get to today, but this was what my chart was looking like when I sat down pretty much on the 4-hour time frame. So we had some huge displacement here on this 6-hour candle, and I was looking at ES of course as well, and I was just checking for SMT, and the only SMT that we had is that the Thursday high was, let's put the drawings back, or the Friday high, excuse me. The Friday high was not taken on NQ, but it was taken on ES, which you can see right here. Let's go to the 4-hour, zoom in. Friday high was taken on ES, but not on NQ. So that to me already was confirming that I should be looking for shorts on top of having that weekly fair value gap as the draw. And then I went into the hourly time frame to see what was going on from here. And if you look at the hourly, same kind of story, right? This is Monday high. We're failing to displace above Monday high, so I'll delete that. And we have a turtle soup up here from the 7 a.m. 1-hour candle. And then this is where exactly what got my attention, right? We have a sweep of the high from 6 a.m., a candle closure below, pretty much engulfing this entire candle, closure below the opening price, which is the change in the state of delivery after we've already outlined our weekly drawn liquidity, and we have SMT with the Friday high, right? So all the pieces are coming together, and now that I see this candle at 8 a.m., pretty much immediately rebalance inside of this order block once again. Now we continue to drop lower into the time frames. So what do I see? I see I'm on the 15-minute. This is my bellwether chart. And I saw that price had SMT here. You could see that ES fails to make a new high, while NQ does. And so in my eyes, this high should be protected, and this should be left as a breakaway gap. So that's why I have this out here that says protected from this morning. And you can see where price is rejecting from, right? If you go into a lower time frame, there is this 5-minute FVG with what? Midnight opening price. Price is just going back above midnight. This is a form of a premium and a discount. In this case, it's a premium. We go above here, sweeping out this high, and then close below, right? And so now all I'm expecting is this high to stay protected if we're going to go lower. And where's our draw? That weekly FVG. And if we zoom out on the hourly time frame, this low right here is our London low. And what do we have? Relative equal lows. So that's why I had this marked out instead. Relative equal lows with what? Monday low, and this is a potential rejection block that you could be used as resistance, right, on the way down, or support on the way down. And the ultimate draw, of course, is Monday low. So, continuing with the trade, I wanted to see if price was going to continue to keep that high being respected. And what do you know? We come up, run this pool of liquidity here from this 15-minute candle, sell off. What do we have? Another change in the state of delivery. What is a continuing theme, right? We have highs being rejected and PD arrays being created, bearish PD arrays being created, and now those bearish PD arrays are being respected on the way down. And almost every single up close candle is acting as what? Resistance. Every single bearish PD array is acting as what? Resistance. Now we continue to zoom in. What do I see? Here. Or not there. I see that we have this 5-minute FVG resting right above what? Relative equal lows. This could be a draw. This could be an easy partial. That's where I did actually take some off just because I am trading on that MyFunded Futures starter account. So the rules are a little different. But all I was anticipating here and what I was looking for now was price to come back into a premium of this range from this high to this low. Why? What do we have? We have relative equal lows, 5-minute pulls to sell side. Now if we look at ES, the same thing is occurring, but there's SMT here. So that's why I was anticipating price to come back into a premium this morning and have 930 be that Judas swing. So you can see here's the 520 low, and here is the 520 low and this low from 415 from NQ. NQ takes them out, ES didn't. We still have our draw. ES still has that same 5-minute FVG lower and the same relative equal lows and the London low where you can see I have marked out right here at 315. So what did I do? I drew a fib from this high to this low. What do we have? I was looking at the 3-minute. We had this high right here, which is most likely going to get ran since it's the pull liquidity right before going into a premium. And I zoomed into the 1-minute because that is my favorite entry time. So I had this high marked out. That's where I was anticipating price to come into. And I also checked the 1-minute time frame to see if there was kind of more SMT, right? We already had that 15-minute protected high. And what do you know? We have more SMT here. You can see NQ makes the highest high at 903, while ES makes a new high, 3 new highs at 909 to 911, right? So now this high, excuse me, this high up here should not be ran if we're going to what? See London lows, right? So this is what my risk to reward was looking like. I went short here, and also we had more SMT here. You could see that price used this fair value gap on ES. This is fair value gap SMT. Price used this fair value gap here, but NQ didn't. So this is actually where your stop loss could be, but I was just letting my trade breathe a little more, so I have my stop loss up here. Or actually it was at this high. But it could have been right here, or even at this high. But you'll see why I like to just kind of give my trade, especially at the 930 open, a little more room to breathe. But this is exactly what happened, right? 930 Judas swing, pop up, and guess what? Boom. All take profit smashed in 2 minutes. So first TP was the CE, pretty much the CE of this 5-minute fair value gap, just because, like I said, MyFunded starter account have to be conservative with the amount of money I make on that account. And then I took the last 5 off at the relative equal lows or the London low, and you can see that was all hit in one candle, which was absolutely beautiful. But the risk to reward on the first partial was like a 1-to-1, almost a little over a 1-to-1. Yeah, 1.4, and then the second TP was a 2.5. So pretty much a 2R trade. And that's all it was. It was just aligning the higher time frame with the lower time frame and anticipating price seeking a premium of this range because of the SMT at those 5-minute lows here. And we had a strong draw on liquidity, which is the lowest hanging fruit was London lows. And then of course we had our Monday low and anything else underneath there if you wanted for your price target. And you can see how much low resistance liquidity was down here. You can see all of this is just inefficient price delivery. So you want to see price melt through these kind of areas. When there's no form of sell stops in these kind of areas, price is going to just melt right through this like a knife through hot butter, right? And you can see that with these 5-minute candles. Smart money is not buying any one of these lows. And how do you know that? Price continues to close below old lows. And in hindsight, you can say I paper handed it, but like I said, I would have liked to hold some for Monday low, but I can't with the accounts that I'm on at this moment. But can't complain. lowest hanging fruit is always the sweetest. I was able to catch the high of the 930 manipulation. Of course, here's the proof. You can see Tradeovate live. Sold 10 minis, or 10 micros, excuse me. Took 5 off at 23.75 and the last 5 off at 214.75, which was a tick below London low, as you can see right here. But that is all for this video. I hope you guys enjoyed, and I'll see you in the next one.